And now we're going to move to a session which really, I think, really sums up the day, given how much CeFi and DeFi we've gone through. We're going to move to a session with Pylarinou on blockchain, crypto, and how it's changing finance. So we keep moving forward. The world isn't standing still. Welcome, Effie, and welcome to your panelists. I'm looking forward to the next half an hour with you.
Thank you, Matthew. Thank you so much. I'm very excited. Good evening, everybody. Our session topic is all about the future of fintech with crypto and blockchain, a topic that I care about a lot. I'm with you this evening out of Switzerland, and I can report that globally, fintech over the past decade has really scaled. And, you know, what we mainly call fintech, neobanks, robo-advisors, peer-to-peer lending, all that is not sexy anymore at all. We're in a stage where banking as a service, super apps, platforms, APIs are well established. And, you know, thinking how crypto and blockchain comes into the finance and fintech world, we have to go back to 2007 when we all thought that the big use case, the big disruption was going to be in capital markets through the ICOs. And at the time, let's not forget that the user experience to access cryptocurrencies was really bad. It was sort of really low rated in terms of financial services. And let's fast forward to today, and I have the pleasure to discuss these topics and how we have progressed and where we are at and what the future looks like with two amazing panelists. So let me welcome, ladies first, Kathleen Breitman, who's co-founder of Tezos and CEO of Coase, and Max Branzburg, who is Vice President of Product at Coinbase. Welcome both.
Thank you.
Thank you.
So we have so much to discuss. I mean, Coinbase is already 10 years old. I can't believe it, and the public company. So there's a lot of progress here to discuss. And Max, I can't but start with you to hear from you. What are your thoughts in terms of the changes in the retail fintech landscape, and how is Coinbase and you specifically looking to build bridges with the fintech world?
Well, thanks for having me, Effie. It's great to be here, and it's great to chat about the evolution of the retail landscape and cryptocurrency, and how Coinbase and cryptocurrencies are working with fintechs and the fintech ecosystem. First, what I would share is that cryptocurrency is acting both as an enabler of fintechs and expanding their business models, but also cryptocurrency is going a step beyond where fintechs have been historically and establishing an entirely new ecosystem. So on the first, you see players like Revolut, PayPal, other fintechs in this ecosystem who are increasingly offering cryptocurrency to their customers. It's enabling them to build new business lines, to increase accessibility to cryptocurrency and expand those businesses. But at the same time, what cryptocurrency is doing is taking a step beyond where those fintechs have been, where fintechs are building on top of the legacy banking ecosystem. They're constrained by many of the same technologies that we've had for many, many years. Cryptocurrency is building a new infrastructure that new financial services and new application providers can build on top of. And that infrastructure is open, it's globally accessible, it does not require permission from some sort of centralized provider. And as that open platform, it's driving a lot more innovation and new services. So there are decentralized money markets where people can earn 5 to 6 to 10% yield on their currencies. There are decentralized social networks where people can own their own content and have a stake in the value of that network. and all kinds of new services that are being built on top of cryptocurrency. So in short, I would say that cryptocurrency is both enabling fintechs and playing a critical role in the evolution of this ecosystem, but also taking a step further and paving a new path.
So as you say, there's two major trends, sort of like a train track, parallel, maybe not at the same speed, but one is integrating and broadening what the fintech products and services, and the other is changing the way they are doing it, because the change, as we'll have the opportunity to discuss, is happening behind the scenes. It's not only the front end. Kathleen, I mean, Tezos is the first cryptocurrency that is listed on Coinbase and offered with staking rewards for Coinbase clients. What is the importance of staking in this evolution that we already touched upon?
Yeah, no, thank you for asking. And just to echo Max's sentiments, I think there's been a really cool, legacy of working within existing financial institutions and making them more accessible to people through the use of cryptocurrencies, and some things that are targeting to things that are familiar. But then there are completely novel, completely novel approaches to how to think about money that cryptocurrencies introduce uniquely, because they just are very different than how traditional financial services are structured. And so staking is one of those things. Essentially, when you stake a cryptocurrency, you participate in a proof of stake network, you are participating in the validation scheme of the ledger. And so you can think about it as like if you were, part of the Visa network, and you were basically helping them approve every new transaction. That would be kind of insane. And you can do that with the cryptocurrency. You can basically validate the ledger as a participant in the network, as well as just a bystander and someone running a node. Services like Coinbase staking allow people who are maybe not technically savvy to participate in this process and participate in this scheme. There are also alternatives if you're a bit more technically savvy to do this yourself. It's just running a specialized piece of software. But it's a good example of something that Coinbase does well, is kind of bridge the gap between people who are very interested in this technology but maybe don't have, the technical know-how, and this new sort of revolution, which is like, if you could participate in the Visa network, that would be really cool. And if you could earn, a small amount of interest for securing it, that's a far more democratic process than allowing, a single intermediary to sort of run its own centralized database.
Great. And tell us about Coase and how it is blurring the lines between financial assets, traditional or conventional financial assets, and I guess the world that is becoming tradable and liquid and is not the conventional asset world.
Oh, thank you for asking. So my second company is called Coase, and it's named after the economist Ronald, who studied transaction costs. And I guess the reason that's the case is largely because I think if blockchains actually do what they're supposed to do, they more or less eliminate transaction costs of the internet, or they reduce them to such a de minimis amount that it's much more novel to send value than the same way that it is to send data. It's a trivial process. And so I think that's revolutionary. I think that's why I'm excited to go to work in the morning. And so with Coase, the first thing we did was we created a game where the entire secondaries market is run and managed on smart contracts and tradable assets that people, I guess, now call NFTs all the time. It's taken on a weird life of its own in pop culture. But yeah, the idea is, we've got these lofty ambitions about what cryptocurrencies could do to the traditional financial system. And obviously there are a lot of people who are trying to replicate traditional financial services using a blockchain. But then there are entirely digitized economies, largely in games, which struggle with a lot of the same tensions that traditional financial services do, because they have to bring on and bring off assets, and they have to basically allocate these assets. And what blockchains really do well is they are a coordination technology. And so I think by basically replicating a lot of the economic tensions in a game and using a cryptocurrency to better allocate those resources, we can make a lot of learnings that will eventually translate into hopefully better financial services products. And so that's the real goal there, is to kind of like play with new models in auctions, play with new models in resource allocation and try to experiment and push the boundaries of that using smart contracts in the hopes that it yields some insight that we can use for other financial services and assets.
Very exciting. I mean, we live in a world where a lot of abstract mathematical concepts are finding, their own way in tangible use cases, and we're also sort of blurring the lines of the virtual world with the physical world. So very exciting times. I mean, having said all this, Max, since Coinbase has been around forever in the blockchain sort of world, and still we're in early stage, but it's worth looking back and if you could tell us, what do you consider the most significant advancements in the industry that have brought us to the point that we are today?
Well, it's a great point, Effie, that it's still very early in this industry, and Coinbase has been around for a very long time, but we have a lot more work to do. But in the 10 years or so that Coinbase has been around, I'd say there have been 4 major phases of development and major inflection points in this industry. The first, I would say, was the protocol phase. This was when Bitcoin was invented, the first several blockchains were created, and this new technology really came to be. And in that phase, we had hundreds of thousands or millions of users that were starting to access these blockchains and use them for various reasons. But the next phase was when we started to see more adoption. This was when Coinbase came around, and we call this the investment phase, where people started buying and selling cryptocurrencies. It became an asset class that people actually invested in. And Coinbase was able to lower the barriers to entry, provide secure storage, work with regulators and provide it in a compliant way, and make it very easy to use and lower the barriers to entry for millions of people around the world. So in that phase, we started seeing probably tens of millions of people using cryptocurrency. The next phase, and this is one that Kathleen has worked on a whole lot and I'm really excited about, is what I think of as the utility phase. This is where cryptocurrency went from being an asset class that people invested in to being a technology that enabled new types of utility on top of it. And that would be things like borrowing and lending and staking and all kinds of new applications that are being built on top of cryptocurrencies. So if you go to Coinbase today, for example, investing and trading is one use case. You can certainly do that, but you can also get these other financial services at a place like Coinbase. You can earn cryptocurrency and do more with it in this utility phase. And the next phase, the fourth phase that I think we're hitting an inflection point on right now, is where cryptocurrency will become a global application platform for more than just financial services. And we're seeing this as an open platform with developers all around the world building new applications on top of it. Coase, of course, is very much involved in this area, but there's many others as well that are building new digital art and collectibles applications where you can buy digital art, store it, trade it. There's new social networks where you can participate with millions of people around the world. And this phase, the application phase, is where I think we'll have billions of people starting to enter the crypto economy and exchanging value on a daily basis. So it's been a tremendous path over the last 10 years. I think it's still very early, and I expect that application phase to play a really big role in the next 10 years of the crypto economy.
Clearly, the developer community and the community that's getting involved in building is definitely increasing. I've been watching, just as an indicator, the number of coins that have just crossed 10,000 on coin market cap just this May, in the midst even of a kind of a downturn in the cryptocurrency market. And it's just only in 2017 that we crossed the 1,000 mark. So I think of this ecosystem as small businesses that are growing around, and there's a lot of experimentation and a lot of interesting use cases being tested out there. And that is wonderful, because that's how innovation happens. And I don't know if you want Kathleen to add something in terms of the historic advancements or the significant advancements in the industry to what Max said?
I think thematically, I think Max hit on all the right points. It's all gone very quickly. I guess one way to put it is like this industry didn't exist when I graduated from high school, and I think most of the people who were very early to it kind of had to grapple with a lot of ambiguity in the space. So it's kind of all mushed together, and like some parts of it go much more quickly than others. There's a lot of experimentation of things that like are clearly not going to work in the long term, but because there's so much momentum and because there's so much like gusto when things are going very well, there's a lot of stuff that kind of falls over its skis, and that's why you see a lot of highs and lows and inflections in the space. But I think broadly, Max is correct. Like directionally, it's moved from like very rudimentary like buying and selling to now basically powering a different version of the internet in some ways.
Great. As you said, there's Max, as you said, there's disruption in the decentralized web, if you want direction, or in social media direction, and of course finance and gaming and so on. Let's talk a little bit about the importance of building on open protocols versus the traditional infrastructure, be it in finance or anything, the internet, social media, and so on. And what is your vision in terms of convergence of those two or integrations? Max, this question is for both of you, but go ahead, Max.
Great, I'm happy to get started. I think that the open protocols that are emerging in cryptocurrency are going to drive a fundamental shift in the way that new applications and financial services are built. And the biggest difference that I see is the accessibility and the pace of innovation that open protocols drive. So unlike the sort of closed networks that we've seen historically, where you might get new financial services that are built on an annual or biannual basis as they go through those internal development checks, on open protocols, we're already seeing development of applications and new financial services that are happening daily. We have thousands of developers around the world building on these open protocols, competing with each other and driving massive innovation. So one such example is two sort of decentralized money market products, Aave and Compound, both getting meaningful adoption in decentralized finance and competing with each other in a way that other money market accounts that are developed on a long-term basis don't always have the opportunity to. And that competition is really healthy for the market. It's driving a much more rapid pace of innovation, and it's enabling more people around the world to access these wonderful services that are being built. So I think that's the most fundamental distinction between building on open protocols and in these closed markets. And in terms of convergence with the traditional structure, I think we're at a really interesting point in the development of this ecosystem. I think that pace of innovation will very quickly outpace what we see in traditional structures and traditional firms. And we'll see some of those traditional firms that embrace the innovation in this open space and start to adopt and share those services with their customers. And we'll see some that don't. And I think that it's more likely that the ones that don't will be passed by as innovation in this open space continues to accelerate. I think the services will be better. The products will be better for customers, and we'll see the global billions of customers that are looking for new financial services and applications go to open protocols rather than the closed traditional firms that they've gone to historically.
Very interesting. So you see what I would call and what is called the K-shaped situation, where we have a group of players or participants in the market that are not only hesitant, do not want to integrate this new way of doing business. It's basically new business models, and then the others that want to transform and will transform at different speeds, and those will thrive and survive, much like the FinTech first wave. But Kathleen, what is your view? And I'd like to try and make a distinction between convergence, integrations. Is there a difference, I mean, obviously, in the first step, we're going to see the traditional players trying to integrate pieces here and there, build open little doors, maybe microservices and so on. But will we see convergence? Will we see large players that are really going to open up to these new structures?
Well, I think Max probably has better purview into that as someone who, Coinbase is one of the, I guess, missing links between the traditional financial world in some ways and the broader cryptocurrency ecosystem. So Max has a great informed opinion here. One thing I would say is basically like the space historically has been way too small for like large institutional actors to take notice into. A lot of the reason that high yields and DeFi exists is because there isn't a large institutional boring money market. There's one that had to be like programmed and bootstrapped by a bunch of people who like love pretend internet money, and so that's got its own like tax associated with it, which is that like the cryptocurrency ecosystem is a lot more exciting than the traditional finance, which is actually a pretty boring, well-run machine. And you've got a lot of really brilliant people competing with one another in that, and it's relatively well established. Whereas like everything in crypto has to kind of be created from scratch. That said, if I'm just doing a small survey of people who love DeFi, for example, it's mostly people who cut their teeth at like some trading in other quant shops who are making arbitrages at the wazoo. So I think there's like kind of like a fun transition period coming around where you've got a bunch of people who are bootstrapping these like kind of rudimentary systems that look a lot like traditional finance, but are sort of not quite right. Taking advantage of the fact that there isn't a lot of like serious money in the game quite yet. And so I think we're going to see like some weird cultural inflections over the next few years. I personally can't wait for it because I think it's a lot of fun to watch.
Great perspective. This is great material for what, movies or novels? Definitely for art, maybe video art that documents these clashes, if I want to give an extreme. So let's look at all that is happening, because there's a lot happening. There's a lot being built, and there's a lot of cultural and mindset changes, and people feel that they have to take a stance. It's very interesting that we are seeing extreme stances, for or against different new ideas that are coming to market. But let's look at the entire ecosystem, because as you already mentioned, we have a lot of disruptions going on. I mean, there's the decentralized web disruption that is threatening, if you want, even the big tech companies, that the conventional wisdom is that nobody can touch them, but that's not true with anything. And then you have the finance world that seems to be a little bit more open, or has gotten already a taste of what disruption looks like. So all this ecosystem together, we are definitely seeing that the trend is more transparency and more openness, whether we like it or not. I don't think there's a disagreement there. How do you see, Coinbase, Tezos, and other big players in this network shaping this ecosystem? Because they've got different roles and different angles. They're both valuable. Give us, the sense of how this is being built. It's like a huge beehive that's extremely busy. The queen, we don't know who the queen is, but there is a queen, that force that has opened this big trend of openness and transparency.
I'm happy to start there, Effie. What I would say is that from the Coinbase perspective, Coinbase is really playing the role of helping facilitate that massive shift from these centralized platforms and infrastructure to the decentralized ecosystem and what we call the crypto economy. And we've done that since the beginning. In the very beginning, we made it easy to buy and sell cryptocurrencies. That was the way that we helped people on-ramp into the crypto economy initially. We then took it a step further when proof of stake networks like Tezos came out to make it easier for people to stake their cryptocurrencies and help secure those networks. So continuing to facilitate that evolution towards new blockchains, make it very easy for the mass market customer. And as we see the next step in this evolution towards that open app platform, Coinbase will continue to play a similar role in lowering the barriers to entry, maintaining strong compliance and relationships with our regulators and partners, and making it easier for both individuals and businesses to enter the crypto economy and participate and take advantage of all of the innovation that we've chatted about today. So I think that'll be the role of Coinbase. I think Tezos and others will continue to play a very critical role, and Kathleen can speak a little bit about where she sees them fitting in.
Yeah, absolutely. So yeah, Coinbase plays a huge role, and it's largely very complementary to anyone who's innovating on the protocol front. You know, you need a strong ecosystem with actors like Coinbase and trustworthy exchanges to help shepherd in sensible regulations and make sure that these things are accessible to people. But then on the vanguard of kind of this open source standards, you've got projects like Tezos, obviously, which exists basically to upgrade continuously and to basically never be satisfied with the technology stack that it has. So a lot of the beauty of cryptocurrencies to date have been a renewed interest in supporting academic research into applied cryptography, distributed networks. And so a lot of that is poured directly back into the Tezos ecosystem. So we upgrade every 3 months on average, and barring any catastrophe, which today we haven't had. But I digress. So basically, we just exist to kind of make this stuff more accessible. Which, of course, as you noted at the beginning, Effie, this stuff was about as useful as a concrete parachute as recently as 2016, 2017. And over the last few years, it's become far more accessible to where you can actually use it on a mobile phone pretty reliably. It's actually kind of fun to use, dare I say, for some people. And that's only going to improve as we have more people coming to the ecosystem. Obviously, the amount of people who just casually buy a Bitcoin has increased with pervasive platforms like Coinbase. But also these different applications that we've had have forced people to kind of think through what money is in a new way. And a lot of the sort of recent evolution of the web, which is kind of veered a bit more towards asking people like who owns your platform, who owns your data, has given interest, a renewed interest in I guess some of the more exotic applications of cryptocurrencies that sounded more like a tinfoil hat speech. In 2013, if you're talking about being deplatformed and things like this, that seemed a little bit crazy. People, I think, were largely content with the web. But now, since every AWS outage kind of leaves people unable to access basic services, I think people are thinking more about where they get their information and how the internet works, basically, over the last few years. So it's been the convergence of a few themes, some of them social, some of them economic. But I think people are thinking through what money is a little bit more, and they're turning to cryptocurrencies as a curiosity. And as an entrepreneur, I try my best to make this stuff as accessible as humanly possible. And the good people at Coinbase and Kraken and all these other great exchanges kind of help me meet them halfway.
I love what you said, Kathleen, and how you connected the social trends and the themes that are, bottom up concerning people, and how you connected them to crypto. I'm dropping the word currencies because it's a much broader concept. We are redefining so many concepts. What is money? What is a bank? And so many other concepts out there. So before we close, because we are running out of time, just a quick 30 seconds from each of you. What is next for Coinbase? What is next for Coase?
For Coinbase, quickly, I think we'll continue to invest in lowering the barriers to entry for the next billion people to enter the crypto economy. We will increasingly enable people to access the amazing innovations that are happening in DeFi and the decentralized web. And we're excited to partner with all of you and the fintechs and traditional firms out there to make it more accessible.
Kathleen?
And with Tezos, we continue to propose new upgrades that improve things like throughput, and accessibility to the platform. And that's realized through companies like Coase, which use the same network to basically create better digital assets on the web, right? So we have 2 games debuting, Emergence and Play with Brio this summer, and I hope you find leisure time to play with them both.
Excellent, excellent. So much fun too. Thank you so much for this great panel discussion.